What's up everyone, it's Caddy with Money Vesting. So welcome on board for our Market Open live stream, and we've got very important inflation numbers coming out in less than 10 minutes. So hope you guys are having a fantastic morning. If you guys can see me and hear me, just give me a thumbs up. I just want to make sure that the audio and the video is working well. Pre-market, we got the SPY, so S&P 500 ETF, just about flat here, down about 6 basis points. And we got the Nasdaq ETF down a little bit over 8 basis points right now, so pretty much more or less flat here on the day. So again, inflation data comes out in less than 7 minutes. It is going to be super exciting. So yes, Michael, I'll break down InMode, I'll break down Twitter, I'll break down Disney, Twilio, Datadog. There's a lot of earnings that we're also going to talk about. But first on the agenda, of course, is the inflation numbers that do come out in about 7 minutes here. So we're going to be talking about that. We're going to spend some time, 15, 20 minutes, however long it takes us to kind of digest that report, break that down, and really see where we are with inflation. And then we'll switch over to stocks and take a look at how the markets are responding and reacting to those numbers. So hope you guys are having a great day. Again, thank you so much for joining, everybody. Make sure that you do drop a like. We are starting to see a little bit of a pullback here for the SPY and the QQQs. And I'll jump over to CNBC and we'll take a look at what the numbers are. And this right here is going to be a quick consensus on the CPI numbers. So again, right now we're sitting at 7% for the total CPI, and the core CPI is sitting at just over 5.5%. That's when you exclude food and energy. And the consensus for core CPI is 5.9%, and for total CPI at 7.3%. Again, that's your consumer price index, which basically takes into account like a basket of goods and services, and we take a look at year-over-year changes for those prices. And of course, we've seen a 7% increase in prices year-over-year. Some segments have obviously increased more than others, which I'll go over in just a minute. And core is basically excluding some of the more volatile things like food and energy. And the consensus range is between 7.1 and 7.4% for total CPI, and core sitting at 5.6 to 6% right now. So again, thank you so much for joining. I really appreciate it. What I'm going to do is I'm going to do a quick poll here for everybody joining in. So we're going to do a quick poll. I'm going to ask you guys inflation today. So, and we're looking at the overall CPI. So overall CPI, do you think it's going to be more than 7%? Or is it going to be less than 7%? Or I'm going to add another option, flat at 7%. So, all right, so I'm going to ask this to all of you guys. We're going to start a poll, and the simple poll is that I'm asking you guys inflation. Do you think it's going to be more than 7%, less than 7%, or flat at 7%? Because right now we are sitting at 7%. So it's going to be very interesting for us to see where the polls end up, and make sure that you do vote because we've got about 5 minutes before the numbers come out. So quickly going over the Bureau of Labor Statistics, and we'll spend some time on this, obviously. But you'll notice that this right here are the price changes from 2020 to 2021, right? So for full 2021, how much prices have increased for these specific items. So gasoline is at the very top. You'll notice a 49, almost a 50% increase year over year for gas prices. Then we got used cars and trucks. That has also been a big contributor to inflation and, of course, prices in general going higher. That's seen a 37.3% increase as there's been supply chain issues. There's been chip shortages for newer vehicles. So new cars have been very, very hard to come by. And as a result, the demand for used cars has definitely gone up over the last year, and that's seen a price increase of 37, almost 38%. Then we got energy in general, almost a 30% increase year over year. We got utility up over 24%, meats, poultry, fish, and eggs jumping over 12.5%. So as a result, a lot of the other restaurants and food items also had to increase their prices because those are a lot of raw materials, right? So meats, egg, fish, you're looking at a lot of raw materials for the finished goods for restaurant businesses. New vehicles also saw an increase of 11.8%. Then we got tobacco and smoking products up over 9% year over year. Household furnishings and operations up over 7.4%. As a result, the all items here was up 7%. That's what we're seeing right now. 7% increase year over year for the CPI numbers. Now, when it comes to food, 6.3%, electricity, 6.3%, food away from home, 6%, apparel was up 5.8%. So pretty much all categories are higher, with prescription drugs, pretty much no change. Communication, 1.3%. Airline fares only at 1.4%. So obviously, as the demand has plummeted because of the pandemic, airline prices have obviously come down, and they are pretty much in line with 1.4, just about 2% increase year over year. Dairy and related products, 1.6%. We got education up 2%, medical care 2.2%. But overall, the biggest changes we've seen is gasoline, used car prices, poultry, fish, eggs, utility prices, tobacco and smoking, all that stuff. So, all right, let's just jump over to the actual markets. We've got less than 3 minutes. Just give me a thumbs up if you guys can actually hear this. So I'm gonna shut up and let me know if you guys can hear this. Just give me a thumbs up. And of course, they're on break right now.
That are delivering this growth, Barbie.
It's been pretty broad-based. We grew in 6 of the 7 categories where we operate. In each of our power brands, Barbie, Hot Wheels, Fisher-Price, as well as American Girl. And
Perfect. So we'll tune back in about a couple minutes here. And what I'm gonna do is I'm gonna make this smaller, and I'm gonna make that one pop up back. So we're gonna minimize this, and we're gonna keep a close eye on the markets. This is the Nasdaq, so I've got the ETF QQQ over here. I've got the SPY all the way over here, and I've got the 10-year yields on this bottom left chart. And then we'll put the inflation numbers over here, and we'll see what the numbers are actually coming in at. So hopefully you guys can see all of it, and we should be all set now. Perfect. So where is our poll sitting at? So right now for the poll, we got 61% people saying that there's going to be more than 7%. 18% people say it's going to be less than 7%, and 22% flat at 7%. So yeah, majority of the people are expecting inflation to be higher than where we are sitting right now for consumer price indexes. So that's going to be very interesting. So again, thank you so much for joining, everyone. Almost about less than a minute left for the numbers to come out, and it should be very interesting for us to see where we are. And then we'll take a look at, yes, it's in 1 minute. So because yes, in under 1 minute, we're going to get the CPI numbers, and then we'll take a look at the year-over-year changes for every single line item. All right, there we go.
Welcome back to Squawk Box. We're just seconds away, about a half a minute actually, from inflation data and new jobless claims. The futures are about where they've been for most of the session. Green for the Dow, but the S&P and the Nasdaq both fractionally lower. The 10-year note could be impacted by what we hear from Chicago, from our Rick Santelli. In just a couple of seconds, 1.934 is where we're indicated right now, standing by at the CME in Chicago. Rick Santelli, the numbers, please. I think they should be hitting right about now.
Yeah, they're going to be hitting the screen right about now. We're going to have initial continuing claims and, of course, our January read on CPI. 223,000 on initial jobless claims, a bit lower than expected. Still, the 188,000 from early December is the post-COVID low. Not only that, it goes back into the late 1960s. On continuing claims, about as expected, 1,621,000. Of course, the best we've seen was at the end of December at 1,555,000. So sequentially, both of those are a bit lower. No revisions yet. Here we go. CPI headline number up 0.6%. Up 0.6%. That equals our last look. The high water mark on that was up 0.9 several times. October of last year being the most recent. If you strip out food and energy, it was up 0.6 as well. Both these are hotter than expected. And on the core side, up 0.9, the high water mark from April. So these were supposed to moderate. They did not moderate. Now for the biggies, 7.5 on year-over-year headline, 6% on year-over-year core. Let's go to the whiteboard. So 7.5%, and that is, of course, on headline. You have to go to 1982 to find a higher number. And, of course, when we look at 5.5 on core, well, 5.5, December of 21 was 5.5. So therefore, we are equaling what we have seen last, but no, it came in at 6%. So now we have to go down on the whiteboard to August of 82. So those are your numbers on the year over year. That's what everybody's most concerned about. We were supposed to see some alleviated pressure on the monthly read. We could frame it quite simply. 1/3 of CPI is housing, it's rent, home equivalent rent. And we all know that it's very unlikely these rents, which have been surging, are going to be going down anytime soon. We know labor costs probably aren't going to be going down anytime soon, even though they are far from, at least at this point, competing with the actual rate of inflation. It's lagging. So even though wages are up close to 5%, they're not keeping up with inflation, but they're also most likely not going to go down. Joe, these are the issues that we need to pay attention to. There's going to be plenty of other aspects of CPI that I would think will moderate over time. It's just that time frame is much longer than anybody had anticipated about 6 to 8 months ago.
Well, stay tuned because we're going to talk to Paulson, who points out a lot.
Wow, so the Fed definitely has their work cut out for them now. I mean, look at the Dow, look at the Nasdaq here. What a drop on the first 5 minutes after the read. Like this is, I mean, that's just absolute insanity. What was the volume like on this thing? So let's take a quick look and then we'll dive into the actual numbers. So for the Nasdaq, we had over 1.1 million shares traded for the QQQ in the first 5 minutes as soon as the read came out. And for the volume on the SPY, so let's take a quick look here. We had over 686,000 shares, but now we are down over 1.3% for the Nasdaq ETF, and for the SPY, we're down close to 83 basis points as of right now. So let's take a quick look for the numbers. So we'll go over to BLS. Again, hopefully they have updated this because usually when I'm using it, the same browser, the PDF doesn't come up here. So this is still for December. This is not what we're looking for. So what I'm going to do is I'm going to open up a new one here and then we'll go over to the PDF here. So hopefully, all right, so January 2022, there we go. So, okay, so 60 basis point increase for total CPI, which is pretty much in line. This was a revision. So last month in December, we actually saw only a 50 basis point increase. Then it was revised up to 60 basis points and it's the same in line in January 2022. And now what's going to happen is we're going to take, January 2021 to January 2022. And as new months come in, these numbers start to fall off. And we're only looking at the last 12 months for year-over-year change. But moving forward, this is the number. And the one thing that we're looking for, let's just scroll all the way down because we're looking at all the way to the right. So this is the column that we need to focus on and see which numbers grew the most. So all items, 60 basis points, and all items less food and energy, which is your core, also grew by 60 basis points. So both basically grew by 60 basis points. 1.8% increase in cereals and bakery products. Then we saw a 9.5% increase on fuel oil. So another big month-over-month gain for fuel oil, jumping over 9.5%, and this thing is up over 46% for the year. So year-over-year, a 46.5% gain. But a big jump here, just month over month, 9.5%. Fuel prices still pushing higher. Electricity, 4.2%. That might have been a big contributor as well. Then we come down the list here. Let's take a look. 2.9%. What is this? So we got flour and prepared flour mixes. Is that right? Yeah, so that's 2.9% month over month. Scroll down, 2.9% on cookies. Come on, you guys. Cookies also seeing an increase of about 2.9%, 2.4% cakes and cupcakes. Fresh cakes and cupcakes, 2.4%, so a little bit of dessert and sweets seeing an increase. Then we got 2.5% for ham, 1.9% for other meats. But still, year over year, these are not big changes, for these numbers, for specific line items that we're going over. The big jumps obviously come from, year over year used cars and oil prices still contributing a lot to the total CPI, 2.6%, 2.3%. And if you take a look at the energy prices in general, right? So they have definitely surged quite a bit over the last month. So since November 29th, we've already seen energy prices in general, oil prices going up another 40%, right? So this is already pricing in December and January numbers. And as a result, fuel oil just going higher. So Brent and crude are literally trading at 7-8 year highs at over $90 a barrel. So oil prices definitely, big contributor to where inflation is right now. 3.7% here for frozen foods and prepared foods. Then we got, let's see, so 0.5% here, nothing crazy. So 9.5% again for propane and kerosene. Big jump here for those line items as well. 3.6% for other furniture. So furniture prices have also been much higher. Let's see if those things are updated here. Let's see. We just remove that. Right here. So this was the thing that I was going over earlier, and you'll notice how these have obviously increased if you include the 2019 prices, and this is 2019. So 2019 to 2020, gasoline prices basically fell 15%, right? So prices came down, and then the next year, which was the entire 2021, we saw an increase of 49.6%. Used car prices did increase in 2019 to 2020, 10%, and last year they saw an increase of 37%, right? So almost 4 times more price increases for used cars. Energy, fell 7% in 2019 to 2020, and then saw an increase of 29, almost 30%. So those top 3 line items, including utility and meats, biggest drivers for inflation. New vehicles in 2019 only saw a 2% increase, and this year, in 2021, we saw an increase of almost 12%. Tobacco products saw increases of close to 9%. We got household furniture and furnishings operations up 7.4%. So big jump here on those line items, right? And the economy is just starting to really heat up because 7.5% is no joke. It is definitely up there, right? It's quite high. All right, let's take a look at the live chat here and let's see what you guys are talking about. So all right, let's see. U.S. tech just flopped. Yep. So there's a lot of pullback happening. And look at the yields. The 10-year yields just skyrocketed to over 1.96. So almost getting up to 2%. And again, that's the risk-free rate, which obviously the 10-year yields. We're also going to look at the yield curves here in just a minute, but 10-year yields also getting up to almost 2%. And the last time we actually saw those levels was back in 2019, right? So back in July of 2019, we saw almost 2% for the 10-year yields, and we're now starting to get back up there once again. So, usually when the yields start pushing higher, there's a concept we've talked about called flight to quality, where they start competing, the bond price of the bond yield start competing with the S&P 500 earnings yield, the dividend yield, and there's more and more capital flowing away from the stock market over to the bond market as there's more and more attractive yields as the yields continue to go higher, right? So if you see 2%, 3%, 4%, 5%, then it's going to become more attractive to go and park your money in yields, collect that 4%, 5% coupon, and why take on the additional risk in the markets. But yeah, that is a pretty strong upwards move to the upside for CPI, and the Feds definitely have their work cut out for them, and March is going to be very, very interesting. It's really a question now about how much are they going to raise rates by. I think at this point it's pretty clear that the economy remains strong in terms of jobs numbers, right? 3.9%, 4% is the unemployment rate. Jobs grew by over 400,000 last month, and inflation is still higher. It's over 7.5%. So really, it's a question of how much are they going to raise rates by, right? Is it going to be 25 basis points? Is it going to be 0.5%? Is it going to be straight up a 1% increase? So that's the real question that the market's now going to be looking answers for right now. But definitely very, very strong move. How's the Dow Jones doing here? So DIA, so down about 20 basis points. Value stocks, not as much hurt as the Nasdaq, of course, with inflation expectations going higher, 7.5%, interest rate expectations also move up. And as interest rates goes up, cost of borrowing goes up, and that hurts some of the growth stocks, some of the higher valuation, higher multiple names as well. So the main question is what to buy. That's a great question. In this market, obviously cash is going to be worth a lot less every single month. It's like worth less, right? So last month we were at 7%, now inflation at 7.5%. That's literally eating away the purchasing power if you have cash in the savings account or in the bank account, right? So at least to get ahead of inflation, you need to be at least be able to do 7.5%, if not more. So that your real return is actually positive. If you are just sitting in cash, then you're actually losing a lot of purchasing power simply with inflation, and your purchasing power is going down. So it's a great question. I think there's going to be a big debate on what to actually invest in. But what I've personally been doing obviously is a mix of growth value dividend stocks. We do also have options now that we started recently, and that's another way for us to generate that passive income, right? So what we do is we sell cash secured puts, and the couple ones that we have sold in the past, we're looking for a cash on cash return of at least 10%, so 10% or more, right? So we sold a cash secured put on InMode, we sold a cash secured put on Mara. We've been able to collect over 10%, 12% cash on cash return. And that's simply if you park your money away in that cash secured put, you're at least able to generate over 10%, 12% return, collecting that premium. So that's one way to do it. I think that's a great, income generation strategy that a lot of people can employ if they have uninvested cash, and if you still want to be able to come ahead of inflation. But other than that, there's obviously asset classes, right? Cryptos, real estate, stocks, gold, even commodities. So you got to pick, what you're comfortable in, what you have most experience in, expertise in. I do think dividend stocks have been doing really well, right? So VIM, this one, even though it's down 0.5%, year to date, this is up over 1.3%. I was actually going to do a video on this very soon, but this thing up over 1.37% just goes to show that people are going towards safety and they are going towards income, right? That's kind of like what we have seen so far in 2022. Energy stocks are a few stocks that pay the most dividend, right? Think about ExxonMobil, think about Chevron. They pay 4%, 5%, 6% yield. So that's where the money's been going towards because inflation's so high, and what investors are really looking for is income and growth, right? So VIM, it's a Vanguard high dividend ETF. And you'll notice that it pays roughly about 2.7% dividend. It's done well, right? It's actually not even down on the year. It's up over 1.37%, while our S&P, Nasdaq, and the Dow is still struggling to turn positive on the year. So that just goes to show, how, capital is kind of being allocated into different parts of the markets right now. But obviously, if you are going to be looking at returns, real estate and stock market and cryptos are just definitely the ways to do it. We just have to figure out which sectors, which stocks are going to yield the highest. Over 7.5%. God, the threshold keeps going higher and higher. Like, what if inflation gets up to 8% or 8.5%? It's like that's the average S&P 500 return over the last 150 years. But anyway, all right, let's take a look at some of the comments here. Yes, 7.5 CPI came in. Buy cookies and freeze them. Let's see. So save some money as your groceries will cost more and dairy, everything, day-to-day expenses. Yeah, Ranjit, I think that's a great point. So even, just spending wise, I think it's best that we are smarter about it. Anything that's that you can buy in bulk, you immediately get a return on your cash on those items, right? So if you can buy something at bulk at a discount, I think that's a very smart thing to do. And you can kind of stock up an inventory of some of the non-perishable items that way. But so did you take a look at Uber earnings? Thank you for reminding me. So let's take a look at earnings now. The markets are obviously down. Inflation number we already broke down, but let's take a look at some earnings, shall we? So Twitter, I was surprised. They actually reported pre-market. On the calendar, they were supposed to report after the markets closed, but I just saw a headline on CNBC that they actually reported pre-market. How is the stock doing here? Let's take a quick look. So Twitter is up over 2%. So not bad, definitely pushing higher, but I was surprised to see them report pre-market here. So Walt Disney, I did a video on Walt Disney yesterday going over complete fundamentals. We'll talk about the earnings here once again, but the CPI numbers are out of the way. So this is our February 2022 calendar. So this thing's done. Next week, actually tomorrow, tomorrow, Friday, February 11th, we've got consumer sentiment and the consumer expectations as well. So Steve, do you see increased viewers this morning since Kevin stopped his open closes? Yeah, actually, let me see. So, oh wow, we got over 900 people. I didn't even realize. So thank you so much, you guys. Everyone, thanks so much for joining. I really appreciate you guys' support, and make sure that you drop a like as well, so it gets this stream out to other people as well. So Steve, thank you so much. I really appreciate it. But yeah, I'm gonna cover all the earnings for you guys here very quickly. First, let's just go over to the calendar. So consumer sentiment and expectations come out tomorrow. And then we've also got the PPI number. That's your producer price index, which is usually followed by the CPI. And this is also going to be very, very interesting because it goes over what manufacturers and businesses are paying for raw materials, right? So it really goes to show if if it's only inflation on the consumer side, if it's only inflation at the end where consumers are paying for goods and services, or if it's also indeed on the producer level, right? If businesses are also being charged higher prices for raw materials. Because if they aren't, and if there's inflation, then there's definitely pricing power involved, right? Because if businesses are not paying higher prices for raw materials, but they're charging higher prices to consumer, then there is a discrepancy, right? So I think that should be very interesting for the markets and where PPI numbers are. And then, of course, next we've got retail sales, we got consumer confidence, we got GDP report coming out for the fourth quarter. And then finally, the personal consumption expenditure, or the PCE, that's the deflator. That's the number that the Fed looks at, along with consumer spending and income levels and savings rate, all that stuff on Friday, February 25th. And of course, next month in March, we've got the Fed meeting. So again, this right here were the inflation numbers. So Disney Parks business roars back as company beats earnings expectations. So Disney earnings, by the way, were phenomenal. Very, very solid numbers reported by Disney. So EPS came in at $1.06 per share versus 63 cents, according to estimates, and 21.8 billion versus just about under 21 billion. That was the analyst estimates. And Disney Plus total subscriptions at 129, almost 130 million. That's including Hulu, that's including ESPN and Hotstar as well, which is Netflix, I think, has about 200 million subscribers, 222 million if I'm not mistaken. So they are just shy of about 100 million subscriptions from Netflix, right? But Disney also has got so much content. I mean, their content is just insane, the amount of content they have. So this right here is going to be the revenue, 21.8 billion. That's a nice 34% growth here. Then we got income continuing from operations. This is your EBT, that's your earnings before taxes, 1.6 billion. Year over year, that's a big jump, over 100%, well over 500%, almost like 1,000%, more than 1,000% increase. Then we got operating income, 3.2 billion, up from 1.3 billion. So very strong growth, almost 2x, 3x pretty much. We got net income going up to 1.1 billion from 29 million. Then we got diluted EPS 63 cents, up from 2 cents at the same time last year. So definitely Disney is recovering very nicely. And this right here are going to be their paid subscriptions as of January 1st, 2022. And we're sitting at just about 129.8 million. So actually, I was wrong. So if you go back here, so 129 million, this is not including Hulu. So this is going to be just total Disney Plus. And then ESPN and Hulu is going to be 21 million and 45 million. So I think that puts us roughly under 200 million subscriptions for Disney. So very, very strong growth. And I did a video complete going over Disney, so make sure that you do check that out as well. So Twitter misses earnings expectations across the board, authorizes a $4 billion share buybacks. So earnings came in at 33 cents versus 35 cents expected. A revenue 1.57 billion versus 1.58. And daily active users 217 million versus 218.6 million. So very similar to what Facebook also reported. And in terms of guidance, they said the revenue guidance next quarter ranging from 1.17 to 1.27 billion, when analysts were expecting 1.26 billion. Where is Twitter? I swear to God. And this is up 1.6%. Facebook on these earnings plummeted 20%. And here we are, Twitter, missing earnings, missing revenue, missing DAUs, missing guidance, and the stock's up 1.4%. They also announced a $4 billion share buyback. Half of that will also be accelerated share repurchases, with remaining being purchased over time. So that's good, right? Share buybacks is what we want to see. Definitely from companies. The more they buy back shares, the better it is for shareholders, because you don't want to see share dilution from companies. So that's good. So despite the missing user growth numbers, CFO said in a statement that the earnings release that its previously stated goals of reaching 315 million DAUs of Q4 2023 and at least $7.5 billion in revenue in 2023 remained the same. So they're not changing that. In fact, PayPal actually changed their one guidance, which is for their active accounts, from 750 million. So they're no longer looking forward to that goal by 2025. But the report is the first under CEO Parag Agrawal after Jack Dorsey stepped down. Inherited Dorsey's aggressive internal goals, including to grow Twitter to 315 million monetizable daily active users by end of 2023. So this right here is going to be InMode's numbers. Let's take a look. So Twitter's already up over 1.9, almost 2%. Let's take a look at InMode here. Wow, InMode's down almost 7%, 7.6%. It's a big pullback here on InMode, just under $50. And they actually reported some very strong numbers. God, this market. Revenue came in at 357.6 million. That's a growth of 73% year over year. EPS came in at $1.92. That's 115% year over year growth. And then we got cash and cash equivalents sitting at 416 million, long-term debt under 5 million. So very strong balance sheet also for the company. Guidance. So I think this is where they lacked a little bit. I think that's what the market may be pricing in. We're looking at revenue guidance for fiscal year 2022. This is for the entire year, $415 to $425 million with a forward price of sales. So that puts us at price of sales on a forward basis under 10. Which if you take a look at the mid guidance of 420, so 420 minus 357, so 63 divided by 357 here, we're looking at about a 17% growth for the company year over year. 17% growth, I think that's the big problem behind this drop here, 6%. But we do probably, right now, there's the earnings call going on. Right now, I think InMode was supposed to start the earnings call at 8:30, but we were covering the inflation numbers, oh well. But non-GAAP EPS came in at $2.06, $2.11, that's their guidance. So we're trading at a forward PE of 26, although after the 7% drop, this may be a lot lower, both the price of sales and price to earnings. So again, that was a record quarter and a record year for the company. This is going to be Datadog. So Datadog was much higher. Let's see if inflation has actually done anything to bring this dog down. No, a little bit. It's still up close to 11%. I think the last time I checked, it was up close to 15%. So this is an update that I posted with all of our members. So revenue came in at just over $1 billion. This is for full fiscal year 2021. That's a 70% growth year over year. And GAAP EPS came in at 7 cents. We're looking at actually negative 7 cents. So negative 7 cents per share. So for the full fiscal year 2021. So the company is not profitable yet. And we're looking at a non-GAAP EPS. So on a non-GAAP basis, it is profitable at 48 cents per share. Cash and cash equivalents, 1.5 billion. Long-term debt, 755. So balance sheet's good. But in terms of guidance for the full fiscal year, we're looking at 1.51 to 1.53 billion dollars. That's a 50% growth year over year with a forward price of sales of 37. That's incredibly rich for the company, even with some very strong growth rates, right? Even with a 50% growth, it's trading at a forward price of sales at 37. Non-GAAP EPS, 45 cents or 51 cents. That puts us forward PE of 354, given the price at 176 right now, 171. So definitely, very, very high multiple for the company. And the stock is up a little bit over 15%. It was, and right now it is up just about 10%. So capital growth, yes, they grew 73% and they're only expecting 17%. So the thing with InMode that you have to remember, as much as I've researched, is that they like to lowball investors quite a bit. And as the year goes by, they raise guidance. You won't believe, like the CEO has raised this quarter's guidance 3 times in the past. They even released it before the earnings came out. So back in January, InMode came out and said that they expect revenues to be higher. So this right here was in January. So issues revenue outlook, raises full year fiscal year 2021 guidance. So this has been the trend for InMode for a very long time. And the CEO likes to do that. I don't know why, but they do like lowball investors. And then as the quarters come up, they raise their guidance and they keep raising the guidance. That's like what they've done. So maybe we see the similar trend as the management sees more visibility into 2022. One of the things that's really important for us to understand is the TAM, right? Total addressable market for InMode is not that big, right? It's only like $3 to $5 billion. So over time, it's not expected to do like billions of dollars in revenue, right? It could go up to $1 billion, $2 billion eventually, but they need to kind of branch into other areas of their business as well in order for them to really grow over the long term. But this right here is going to be Twilio. So Twilio revenue is at $2.84 billion. It's a nice 64% growth year over year. GAAP EPS came in at negative $5.45. So again, not profitable. But this stock was also up quite a bit pre-market. So it's still up over 14%. And non-GAAP EPS came in at negative 25 cents per share. Cash sitting at over 5 billion. Long-term debt under $1 billion. So very, very good balance sheet. And active accounts also up 15% year over year to 256,000. And guidance for the first quarter, fiscal year 2022, we're looking at 855 to 856 million, 45 to 47% growth year over year. And a Q1 sitting at just about negative 26 to negative 22 cents per share for the company. So pushing higher a little bit after the brutal sell-off that we've seen from 462, it was down a little bit over 60%. All right. So let's see. So Dorj CPI was at 7.5% and core is sitting at 6%. And let's just take a look at some of your guys' comments here. So that's pretty much everything I had on earnings. But QQQ is still down about 1.5%, so definitely pulling back. Let's just take a look at some individual companies here. and let's see how they're doing. So definitely, obviously, inflation ruined a lot. And so, all right, Kevin says the yields are about to break 2%. So yep, we're just under 1.99, just under 1.99. So definitely affecting the technology sector more than it's affecting the value sector. So Tesla down to $912, down over 2%. We got Amazon down over 1.3%. AMD is down over 3%. PayPal is down over 1%. How's Nvidia? Nvidia is down over 2.3%. Apple is down about 1.1. Let's take a look at Google, and down 1% here. Facebook, it is down 1.3. So yeah, I mean, the market, mostly the technology sector, bringing everything down, and Bitcoin also started pulling back here. So we did get up to 45,100, and now we're down 1.4%. So this is a very strong resistance for Bitcoin, right? At roughly 45,000, 45,600 inside this red rectangle is going to be the level to watch very closely. And look at the VIX. So volatility did spike over 7% right now, jumping back over 21 at the moment. So, all right, let's see. Yields are going crazy. Yep, definitely. Time to buy CrowdStrike and NET before earnings there. So both of those stocks, CrowdStrike and what is it? NET. So NET, I don't remember what, Cloudflare? So Cloudflare, yeah, Cloudflare reports later today, right? So they report after the bell. So I would just one thing that I would recommend is that you take a look at the valuations. The valuation is definitely very rich for both of those companies. I do personally want to get into CrowdStrike, but the valuation just doesn't suggest that. But you got Datadog reporting some incredible numbers, and they were up, so that that could suggest some more upside in the short term for both of these companies, right? NET is already up over 1% on Datadog's numbers, and CrowdStrike is pretty much flat here, down just about 1%. However, the valuation for both companies is really rich right now. All right, let's see. So 50 basis points in March, says unlimited stimulus. Let's just take a look at, so Cloudflare will crush ER. I have no doubt that they will. It's just the valuation, I think, remains a little bit rich for the company. Okay, so we're going to do the market open today. I don't think we need to, but let's just do it anyway, because the last few times we've done it, the majority of the poll that has expected either green or red, has and then we've actually moved up towards the end of the day to close at a different level. But let me ask for everyone's poll here for the vote. So market open, markets today, and are we going to see green, red, or flat today in the markets? And without a doubt, the markets are definitely very red. So we'll see what happens. All right, let's take a look at Digital Turbine. So APPS, they reported some very strong numbers yesterday. So they rallied over 8%, back over $50. So I was really thinking about selling a cash secured put on this, but I ended up pulling up the trigger on something else. But this, definitely very strong rally. They reported some good numbers, and on a forward PE basis, on a forward price to sales basis, they're trading at decent to low valuations, right? So we talked about it yesterday. We did some very quick calculations, and I think it's trading at under 28 times PE and under 5 times price to sales on a forward basis. So I think that's that's very strong for Digital Turbine, and the growth has also been very compelling for the company, right? So very strong growth. So revenue has been consistently growing, 88 million to well over 375 million. So I like Digital Turbine, right? Most of the fundamentals I really seem to like. Let's take a quick look. So the only issue would be the shares outstanding. They have also gone up quite considerably, coming in from 57 million to well over 90 million. So that's almost doubling the amount of shares outstanding, right? So that's the only thing that I would watch and pay close attention to for Digital Turbine. If they continue to issue more shares, that's a big turnoff as investors. We don't want dilution, so that's something to pay close attention to. So all right, 10-year yields are hitting 2%. 1.998 is where we are right now. Almost 2%. If you go back on the chart, let's take a weekly chart here. The last time we saw 2% was back in July of 2019. So it's been almost 3 years since the 10-year yields specifically have gone up to over 2%. Let's just take a quick look on CNBC here. And we'll go over to the markets, and we'll go over to bonds. I'm interested to see how the bond market is moving. and what that yield curve looks like. So all right, so we're seeing definitely a big move to the upside across the board. So 30 years sits at just under 2.3. We got 20 years sitting just over 2.3, and the 10 years we just looked at 1.998, 7 years 1.986, US 5 years 1.89, and the 2 years sitting at 1.463. So if we do some very quick math, 1.998 minus 1.461, we're looking at a 53. Oh my God, this thing is just like getting narrower and narrower. We have tracked this for a long time, and this is the yield curve, right? We're looking at the difference between the 10-year and the 2-year, and it's sitting at 53 basis points, or pretty much 0.5%. This number has been shrinking very, very rapidly. I think last year in November, this thing was over 83 basis points, 85 basis points, and now it's almost been cut in half. So the narrower this gets, the flatter the yield curve becomes, and eventually it inverts, meaning the 2 years will start to yield more than the 10-year, which doesn't make any sense, which historically has signaled a recession in the past. So we'll see what happens over the course of 2022, but definitely something to keep in mind, and definitely something for us to track consistently here. Wow, look at Facebook down another 1.8%. AMD is just falling off here, down over 3.3. And we got the Nasdaq now down close to 2%, with S&P down over 1%, 1.24%. So yeah, I mean, there's a lot of fear coming into the market all of a sudden right after the inflation numbers. Lots of selling pressure right now. So Eric says SPY 347 end of the year. So 347, wow, 347 would be a big drop. So end of the year, you're expecting the SPY, 347 would be a 23% drop from here. From all-time highs, we'd be down, we'd be down quite a bit, 28%, 29, 30%. That rally yesterday just gone, yeah, really. I mean, Nasdaq was up over 2%, and now we're back down close to 2%. So yesterday's gains are pretty much wiped off. And the Dow is also pulling back here. 68 basis points is quite a bit. All right, so we got a 74% people expecting the markets to be red, only 16%. So we got 16% bulls in the live chat right now, and 10% expecting the markets to be flat. So pretty much 73% people expect the markets to be down, and about 27% expect the markets are going to be either higher or flat on the day. We still have a lot of time till market opens. So if there's any stocks you want me to go over, I mean, so far we've covered the CPI numbers, we've covered volatility, which is going up pretty nicely, up over 9% right now. And then of course we've talked about earnings reports, the companies that have reported earnings. Bitcoin's pulling back after hitting that resistance. Ethereum, it's got a resistance at roughly 3330 levels, and that's a resistance support level stays put at close to 2800, and a lot of individual stocks are also starting to pull back here. So all right, let's take a look at InMode. So we have talked about InMode in quite detail. Again, if you can go back on the live stream and kind of take a look at what the earnings were and what the chart looks like. But let's just take a look at some of the newer companies that we haven't really talked about so far. So let's take a look at PayPal. So what about PayPal? PayPal is down close to 1.7%, so 120. It's trading right at its 300 simple moving average on the weekly chart. So again, double top resistance previously, and we're sitting at 120. Done a complete fundamental analysis on this company as well. They're still expected to grow by 19 or 21%, excluding eBay growth, and earnings are also expected to be somewhere between 465 and 485 for PayPal. So 120 down to $112 are going to be two support levels to watch for the company. And of course, on a weekly chart, it's incredibly oversold, perhaps the lowest RSI reading we've seen ever in PayPal's history. Right now, we're trading under 17. I didn't even notice that up until now. But so Abhishek, which moving average do you use? So I use, usually I use the 50, the 100, the 200, and the 300, all SMAs. And then if I'm looking at shorter time frames, then I would also, prefer to use the 21 and the 50 exponential moving average, because those are more faster moving averages. But simple moving average, you can use like the 50, the 100, the 200, the 300. Those are like the most respected and the most used widely moving averages. Shiv, welcome on board. Happy to have you here. So let's take a look at Facebook. So Facebook bottom. It's very difficult to really predict exactly where Facebook stock is going to bottom out, but I can tell you that the valuation is extremely cheap. This is perhaps the cheapest valuation Facebook's ever seen in its 11-year history of being a public company. So it's still got very good cash flows. It's still got very good revenue. It's still got a lot of daily active users. And yes, there's been a lot of fear around Meta and Facebook and where they're headed. But in my view, I think the valuation is just so cheap that you can't, in my opinion, pass up on a stock like this trading at such low valuation. So support right now watching is going to be 220. So this right here is going to be the level to watch. We did pick up some Facebook at 222, and I'm watching $220 next. So InMode down 10%. Let's take a look. That's good that we sold our cash secured put yesterday. So we had a cash secured put on InMode, which we pocketed a little bit over 60% profit. I sent out the alert in our Discord. I basically said that I'm closing this put because I'm confident on the earnings, which the earnings didn't disappoint. The fundamental of the company still grew and very good numbers, but I just didn't want to hold on to InMode for the earnings. So it's good that we actually locked in those profits. I still do have shares. I think the average is around 45, 46. If it does come down to $40 or lower, if it does come down to 32, I mean, I'd definitely be picking up some more shares because the valuation is low and the company's also got some very strong growth rates. Still looking for 17-18% growth, but like I said, they are kind of lowballing investors right now. That's been what they've been doing over the last several quarters. And as they get closer and closer to the earnings, they're going to raise, in my view, their guidance moving forward. So yes, so closed as in I bought back. Yeah, so I sold earlier and I closed, meaning that I bought back my cash secured put. So, all right. So Facebook and Baba looking like bargains. Yes, I agree. I think Baba also trades at very, very low valuations. I think Alibaba, we've already talked about it several times. Trades at very cheap valuations, free cash flow strong, revenue, earnings, everything strong. But it's just a patience game for a lot of these companies. For Facebook, I feel like, I've done as much research as I can do for the last week. And right now, Facebook is seen as kind of like a dead money stock. Same with Baba. It's been seen as kind of like a dead money stock for a long time. But, if you believe the fundamentals are going to rule over the long term, then, in my opinion, this is the time to be accumulating if you want to build out a position and if you've, of course, done your research on these companies. Alibaba, there's still a headwind with the Chinese regulatory issues and what they're actually doing over there. So that is still a headwind that I'm not comfortable with fully. But Meta, I mean, that's just a very low valuation that I can't pass up on. So Ryan, do you think put options on growth stocks with a high debt a good shot for market open? Like today, I feel like the most of the moves have already happened. I mean, a lot of stocks are starting to pull back already. So we'll see how much downside we do have intraday. But usually when you see extreme moves like these, for the Nasdaq, like it's already down 2%. If it falls another 1%, 1.5%, that you will have buyers step in. I mean, it's just not going to be a market where you just see like consistent red over red over red, every single candle just dropping and dropping. You will see buyers step in, right? So it's not going to be like the bears are going to have a clear way all the way down, bringing the markets down 4%, 5%, 6% on the day. But you will have some bullish sentiment kind of kick in because at some point, the valuations will matter. Not for a lot of companies. I do think AMD, like Nvidia, Amazon, those are still companies trading at high valuations, which is why, the last time I added AMD was under $100, right, at $99.45. Right now, I have no interest on adding Advanced Micro Devices because it's, trading at a rich valuation. Same thing in Nvidia. I haven't touched that stock in almost 2 years. So it really depends on, the growth and, of course, the valuations. Where can you actually pick up those companies, right? What's the price that you're paying versus the value that you're getting for that company? So yes, the volatility is definitely higher. So VIX is higher on the day again, Andrew. So we're up a little bit over 10.6%. So 25 is going to be that next resistance level to watch, all the way up to 29 to 30 for the VIX. By the way, I sent out a really long message in our market updates channel, in our Discord. So make sure that you do check that out if you are part of our Discord. Kind of goes over my thoughts put together about the markets and the economics of the markets as well, and some of the things to consider if you're really looking at the macroeconomics, right? So if you're looking at inflation, monetary policy, CPI numbers, unemployment, GDP growth, all those things, it will help you kind of navigate the markets here. All right, so market's definitely coming down. Let's take a look at some stocks. All right, so I'm going to do some quick technical analysis. I'll share my 2 cents on the fundamentals if I know more about the company, but if it's something that I have no idea about, then I'll definitely do some more research and add it to my watch list if I like about it. So Michael, let's take a look at NEO. So NEO is up a little bit over 3.6, well actually down 3.6%. So they delivered just over 9,000 vehicles in January. So still a strong growth year over year, but of course XFANG and Li Auto delivered far more vehicles. Earnings are going to be coming up very soon. So March 8th, we've got the earnings. We've also got the ET7 rollout happening in March, and then ET5 is going to be coming out later this year with the expansion into other parts of the world. So still lots of things are lining up well for NEO, for the underlying business. But for the most part, NEO's also been kind of caught in the crosshairs with Chinese regulatory authorities, and of course with Alibaba, Tencent, all those companies coming down. A lot of the Chinese stocks have underperformed last year, so that's been a headwind for the company for a very long time. But resistance is going to stay put at close to 27.50. The last couple of days have been very strong for the company, but for now we're just going to keep a close eye at that resistance at $27. Arnold, you go to school in America? Yes, I went to school in the US. So Moises, did you sell something yesterday? Let me see. I don't think I did. Let me just go to my alerts here. So no, not really. In fact, I bought a very small position in Upstart, just a new position. Probably that stock is getting drowned today, so down a little bit over 3.8%. So we started a very small position in Upstart, because the valuation is still high, and then I also averaged into PayPal a little bit, and then I only closed that cash secured put on in mode because I didn't want to hold through earnings, and then we also started a new cash secured put on another stock. So those are the only things that we really did. And I mentioned our Discord as well, because oftentimes we think the volatility is high. When we see the VIX being really high, we feel like there's something we need to do, right? There's just so much things happening. There's so many things happening. Volatility is higher. We need to do something. And oftentimes, and especially if you're confused, especially in a market like this, the best thing to do sometimes can be do nothing, right? Doing nothing is also a decision that you can make, right? And you can simply just observe the markets, kind of step back, evaluate the situation. If you want to raise cash, you can do that. But instead of over trading and thinking too much, we can also take a step back and just do nothing. And that oftentimes works out pretty well over the long term if you've got that time horizon of 5, 7, 10 years out, right? Instead of just getting in and out and just being able to over trade, and there's going to be decision fatigue, and we end up overthinking a lot of things. I'm just coming from my personal experience. I've made those mistakes myself, and that's why one thing that I try to avoid as much as I can is over trading and just making too many decisions, right? And just getting in and out of things. So the fewer decisions you make, the more quality of those decisions you're going to have, right? And the more decisions you make, the quality of those decisions will drop eventually. So try to really limit the amount of decisions you make in the market. Kevin says, is it too early to start drinking? Well, it's 7 p.m. somewhere, right? So it's like what time is it over here? So it's 7:45 p.m. over here. I don't think it's late. I think it's perfect. So I think that's important, right? So it's gotta be 7 p.m., 8 p.m. It's gotta be happy hour somewhere, right? So might as well take advantage of that happy hour. Affirm. Let's take a quick look on what they are expected to announce here. So let's see if we can get some guidance on Affirm's earnings. So let's see. All right, so Affirm earnings estimates. So we'll go over to the news. We'll see this one. It's probably going to be a paid thing, so I won't be able to look at it. Yep, of course. So, all right. So a firm, let's see what type of numbers are they expecting. So the firm has earnings coming up pretty soon. Events are shaping up quite nicely for their report. And the current estimate is that for the quarter, they're currently at loss of 37 cents per share compared to consensus estimate of loss of 44 cents per share. And let's take a look at the revenue if they have anything here. But yeah, that's the consensus estimate of close to about a 37 cents loss. 37 to 44 cents loss per share is what they're expected to announce. Big gain, 14% yesterday. But yeah, a firm support level now is going to stay put at close to $70 per share, right? So that is going to be the level to watch very closely. So Stan says, I'm in Vietnam. It's 9:16 p.m. here. That's great. But this right here is going to be that support at $70. Next resistance is going to be $85 per share. I think a firm has got a great business model, buy now, pay later. And if they're definitely, a big competition to PayPal, to the likes of Square, to a lot of other fintech companies, and their partnership with Amazon obviously opens doors to a lot of transactional volume as well that they're going to potentially be doing in 2022. But that being said, $85 still going to be that resistance. The valuation is still something that I don't particularly like too much, trading at 18 times sales. So the stock definitely, in my view, needs to come down by a lot in order for me to be interested in this stock. However, it's not going to be all about looking at the valuations. We're working on a different spreadsheet. So the spreadsheet that I've been going over are these ones, which are for more stable companies. So, we looked at Tesla, PayPal, Netflix, Meta. We looked at all these companies, and what we really do is we look for stable revenue growth, stable earnings growth, operating income growth, and we look for all these valuations. But that's not going to be true for every company, especially the companies like Affirm that are so early in their business cycle, right? They're still starting to grow. Their revenues are exploding. The operating income, the gross profits are expanding. You don't expect them to report positive free cash flow or positive EBITDA or great earnings, right? So while their business is getting developed, I'm really working on a different set of metrics that's going to help us kind of at least do some fundamental analysis, right? So price to earnings, price to free cash flow, enterprise value to EBITDA is not going to apply to companies like Affirm because they don't produce those, right? So we're not going to be able to look at those multiples, but we're still going to be able to look at the gross profit or the operating profit or some of their KPIs that they report, right? So number of users or transactional volume, all those things. So that spreadsheet can be used for companies that are in their startup phase or in their earlier stages of their business expansion. So we're going to probably try to do that, and that spreadsheet should be out over the next couple of weeks. It's just getting all those numbers and getting all those things correctly up there, and then I'll make it available to all of our Patreon members as well. All right, so let's see. So we got less than, So about 11 minutes for the markets to open. And so far the poll is still 71% red, 17% green, and about 11% flat. I'm going to end the poll now. So, all right, so let's take a look at Etsy. I think Etsy is a good one that we can look at for Jay. So Etsy's definitely come down. I've done an analysis on Etsy. Price target was over $300 plus. And we exited pretty much around these levels in the 250s, 270s because the risk reward ratio, right? At some point, you have to really ask yourself if the additional reward really worth it, right? So if you take a look at Etsy, right? And you are at roughly 270, right? Think about Etsy at $260 and you have a price target of, let's say, 340, 320, right? For that additional 26%, are you really going to risk all that downside? Right? It doesn't make sense from a risk reward standpoint, which is why it makes sense why you want to lock in some profits or you want to trim or you want to completely exit because it's almost at your price target, right? I can give you an example of, another example we can talk about is Dogecoin, right? Dogecoin was almost at $1. Well, it was at 75 cents, but a lot of people were expecting it to go to $1, but that 75 cents to $1, is that really worth is that marginal gain really worth the downside risk that Dogecoin has, right? That's the analysis that you need to do. And that's kind of like part of trade management, right? Because as you're gaining more profit, then at a certain point you have to either move up your trailing stop loss, or you have to really think about, should I exit or should I keep holding for that marginal gain, right? So for Etsy, I think it's definitely come down to much more reasonable levels now at 141. Strong earnings growth and strong revenue growth. Of course, the pandemic helped them a lot. You'll notice a big spike here from 2019 to 2020. Revenues more than doubled, earnings more than tripled, and the valuation is the only thing that still is a little bit high for Etsy, and they are reporting earnings next week. Next week's also going to be very exciting, by the way. We've got a lot of earnings coming up. I think Adobe's still yet to report, Palantir, Nvidia, Square, Intuit. Those are companies that are still yet to report their numbers. So far we've gone through the financials, the banking stocks, we've gone through the big tech and the FANG stocks, and now I think it's all about some of the smaller cap, mid cap tech companies and other companies, cyclical companies, communication services, software companies to report their numbers that are going to be super interesting. But for Etsy, resistance is going to be 154. I can't remember where the valuation is for this right now. So let's take a quick look. So, all right, so we're going to go to valuations here. Let's take a quick look on. So, okay, so it's actually not bad. Price to earnings on a forward basis, 37. On a non-GAAP basis, then on a GAAP basis, 47. On a forward basis, and we got enterprise value EBITDA at 29. And then price to sales at just over 8. So it's not that bad. Excuse me for saying that it was rich. It's just a little bit borderline high. And of course, also depends on the growth, right? So if you come over to the growth for the company, they're expected to grow revenues by 50% next year. EBITDA is expected to grow by 61%. And then we got EPS expected to grow by 66%, right? So those are some very, very strong numbers. And we should see some more guidance, some more color on that from the management once they report next week. But I think the valuation is definitely coming down there once again. In fact, we actually did purchase. I can't remember what price I paid for it, but it was definitely in the 170s or 180s the last time we actually bought Etsy. So it's definitely there once again. If it continues to come down to like 120s, 125, 115s, I'll definitely be considering this one again. All right, so let's take a look at Portillo's. So Marco, what did I miss? Just woke up. So, oh man, we got the inflation numbers. So CPI sitting 7%, 7.5%, core sitting at over 6%. And we went through a lot of earnings and a lot of companies here. Volatility is high, oil prices are flat, Bitcoin's pulling back. There's a more risk-off environment here right now with tech stocks obviously pulling back because inflation's definitely higher and Fed has got a lot of work to do. So what is the ticker symbol, Angel? I can go over the ticker. I can't find the company. If you give me the ticker symbol, I'll definitely go over that for you. But we got less than 6 minutes for the markets to open, 2% down almost for the Nasdaq ETF. We got the SPY down over 1.3 and the Dow Jones is down close to 72 basis points right now. So are we going shopping today, Caddy? Not as much. Maybe for Facebook and PayPal, but those are the only two stocks that I really find attractive, even at these levels. But like I said, I don't want to overexpose myself to Facebook right now. Just over 8% allocation. I don't want to go in too heavy just yet. So maybe some cash secured puts on a few companies, but other than that, I don't think I will be aggressively buying just yet because volatility is kind of in the middle. Like it's not too high, it's not too low. It's like at a very confusing state, and that's why I want to be very cautiously optimistic. I don't want to like go too aggressive, and I want to give myself more runway with the buying power I have. That's another thing, right? Never go all in on one day or 1 week. Always have cash available on the sidelines. And dollar cost averaging is a very slow and steady process, right? It's a very slow, consistent process, and allow for your prices to make a bigger difference between the prices that you pay, right? So in case of Facebook, right, if you bought it at, let's say you bought it at 295, right, for example, if it comes down to 290, right, I wouldn't necessarily be dollar cost averaging there because that's only a $5 difference. If it makes a bigger move, then sure, it makes sense why you want to dollar cost average because you really want to put a dent in your cost basis. And the only way you do that is by dollar cost averaging at a much lower level. So, do it in a very slow and steady pace, and obviously don't try to not run out of buying power because from what we know, the dip can certainly keep dipping. All right, PLTO. So this is the company. PTLO. Let's see. What is it? Is this, I've heard, is this like a restaurant or like a cafe? I've definitely heard of this. Portillos, how do you say this? So street food through high energy multi-channel restaurants designed to ignite the senses and create a memorable dining experience. The company was founded on January 8, 2021, and they're founded where? Oak, Brooklyn, Illinois. Okay. So very, very interesting. Seems like a very small cap company. Oh, $2 billion. $2 billion restaurant. That's incredible. So let's see. We don't have much financials on the company quarter over quarter. The seen actually decent growth. They're profitable, so very good. Restaurant business, you don't expect high multiples. So right now we're trading at 13.4 times book value. That's the only multiple we do have, and it's a very new company. They literally just IPO'd, in October of 21. So there's not a lot of financials for us to go over, but right now, I would market support roughly in the $23 range. And this right here is going to be kind of like a lower high, right? So we're definitely forming a descending triangle with these lower highs and a support sitting roughly at $23. What I will do is I will quickly see. So annual, $455 million, right? So that was the revenue for the company. $455 million with $12.2 million in net income. So if you were to calculate the price to earnings, so 2,2047 divided by 12.26. So we're trading at about 167 times earnings on a trailing basis right now, right? Because simply what we're doing is we're taking the market cap, divide that by the earnings, which is your net income for the company, and we're trading at 167 times earnings, and revenue was 455 million. So let's just do 455. We're trading at under 4.5 times sales. So price to sales is not bad. I think 4.5 times for a restaurant is still, can be argued rich, but price to earnings is definitely very high. So either the price needs to come down or the earnings need to go up. And earnings in the restaurant business, I mean, they're already doing, so 2.6%, that can definitely go higher. In this business, I think 2.6% is still low for the company. All right, so markets are about to open about a minute 30. So we'll go up to our actual indices. So this is going to be the Nasdaq, ticker symbol IXIC. This is the one that I like to follow. This is the US Composite Index. This is the SPX, the actual S&P 500 index. We're going to go over to the 5-minute charts here. And then we got the Dow Jones, the actual Dow Jones at just over 35,700. I'm also going to open up the select sector indices for the S&P 500. This helps us really understand which sectors and which commodities, which prices are doing well on a year-to-date basis, right? So if I go over year-to-date, you'll notice the 10-year yields are up close to 19%. XLE, which is your energy sector. So as we talked about, oil prices going higher, right? 40% increase in the last 2 months. They have definitely helped boost Exxon, Chevron, and a few other companies in the energy space, right? Their revenues, earnings have been very good. And as a result, the energy sector is completely diverted away. That's the blue line you see on the chart, right? At the very top. It's up over 20+%. That's the only sector that's up double digits in 2022. Then we got XLF, that's your financials, up over 3.8. And then we got Ethereum. It was down quite a bit, right? So at one point, Ethereum was down over 35%. It has made some recovery, but all sectors are pretty much stuck together here, down anywhere between 3%, 10% to as high as 1.7%. So we're like in that range between 1 and 10% in the red. All right, so off we go. Time to see where we are with the markets and how the markets react intraday here. All right, I'm gonna have to shut off that annoying noise here in just a minute if it continues. All right, so where are we? We're all the way, okay, so I just gotta turn that off. We're all the way down here. S&P, the Nasdaq opens right here. We're down over 1.8%, and the Dow Jones is also down all the way over here, down over 250 points. So that's that, and then let's take a look at the stocks here. So Facebook down over 2%, so just under 227. Tesla is down to $907. Let's take a look at Apple. Apple is down 1.3, so just under 174. You got AMD at 3.5% in the red. So this is going to be all the stocks here. So I'm just going to put this pre-market all the way over here. and we're gonna refresh this to change which one's the highest. So Walt Disney is up the most, 5.8% after phenomenal earnings. AstraZeneca, I think, also reported numbers. So let's take a quick look. AZN. So they're also up over 2.2%. They reported numbers. When did they report? So I think they reported yesterday as well. But very strong move for the upside for them. Nasdaq having some buyers step in the first 5 minutes. We'll see if this continues to hold here, but yeah, from a macroeconomic standpoint, I think the Fed's got a lot of work to do. The good thing is the good thing is that the jobs numbers came in strong, so there's still a possibility, but so far as it stands, the Fed is not so cornered, right? If the jobs numbers were poor and the unemployment rate was higher, if the GDP growth started to slow down, right? So two things that are signals of a potential recession is unemployment going higher, meaning there's more and more people unemployed in the US, and the GDP numbers are weak, right? If they're not growing. If those two numbers actually happen, and if inflation is still high, then Fed is in a very tough spot, right? They're kind of like, I forgot what the saying was, like you're in between a tough spot and a rock or something like that. I forgot what it was, but that's kind of like the position the Fed would be if GDP were to slow down and we were to see a decline in GDP and unemployment was higher, because then you can't really raise rates because that would hurt the economy, which is already weak. But you also can't raise rates because then inflation is already high. Rock in a hard place. Yes, Robert, thank you. That could be the Fed if GDP and unemployment were worse. Yes, thanks guys. Thank you for letting me know what that means. All right, so let's take a look at what's actually down the most. We'll just sort this. And this is mostly large caps. So I'm looking at about 100 billion and more market caps in the US. So Walt Disney, like we covered earlier, up over 4.86%. Micron is also pushing up over 1.6. Bank of America, we got Philip Morris and Wells Fargo also pushing up. So some of the banks pushing up, AT&T's up, but a lot of red here, with Shopify down over 3.8. We got Intuit down over 3.3. So sort with the red here. So Shopify down over 3.4, down to under $900 again. Adobe's down 2.6. So again, you'll notice that some of the higher valuation companies, higher multiple companies like Shopify, Adobe, we've got Nvidia on there, down over 2.2%. AMD is also part of this list. Netflix is pulling back. Microsoft is down 2%. So those are the ones that are starting to drop more, with inflation expectations going up to 7.5% and interest expectations also going up quite a bit. So the same, it's very, from a risk standpoint, the only things that we need to be concerned about with interest rates going higher are two things. Number one, cost of borrowing goes up, right? And if cost of borrowing goes up, and if you have to read all these earnings transcripts for guidance, I'm assuming, and this is an assumption from me, that a lot of the management is already pricing in an increase in their cost of borrowing, because at this point, you pretty much know that interest rates are going to happen, right? They're going to hike interest rates, and CEOs should be pricing that in their future guidance, right? So when InMode says an EPS guidance of whatever, $2 and $2.10 in between that should be pricing in an increase in interest expense, although they're based out of Israel. So it doesn't really affect them all that much. But other companies, right, when they're forecasting for the next quarter or for the full fiscal year 2022, they need to be pricing in those interest rate hikes, because what that does is that increases their cost of capital, cost of debt, pretty much, cost of borrowing, right? And then when that goes up, that's a bigger interest expense for the company, and that lowers or reduces their bottom line. So earnings start to compress for the company. That's number one. Number two, flight to quality, which I've already talked about, right? As interest rates go up, 10-year yields go up, 30-year goes up, and people start to find those investments more attractive, and they flock away from stocks, from equities over to bonds as safety, because you can get that same return, if not a little bit less, for absolutely no risk, right? In the stock market, you are taking on risk, so you do expect that additional premium, in other words, that additional profit for taking on that risk. So InMode falling, yep. So InMode is down after the guidance. I think that's the big reason. So we're down a little bit over 11%. So we talked about this yesterday, and we also mentioned this in our Discord as well. I only have shares right now. I closed out of the cash secured put yesterday. But right now the shares, if it does come down to 40 or $32, those are some levels that I'm watching. Again, I think from a forward basis, from a forward PE and price to sales basis, I think it trades at a very reasonable number. So if you come over here to our analysis again, so let's see. So this is the InMode's numbers, right? So we are trading at a forward level of 9.75 times sales and about 26 times PE. But it says the future guidance that is really affecting the stock right now. So, you know, I think it's just about $48, $49. All right, so we do have some buyers stepping in right now. We got the Nasdaq pushing up. We're still down about 1.4%. We've got the S&P just down about 1%. Let's take a look at LABU. Thanks for reminding me, Nicholas. So LABU is just down a little bit over 6%. Strike prices are quite low. They're down to $16. So we'll keep a close eye on this. I've been talking about the SPS IBI. That's your technology, that's your biotechnology sector, right? That's the biotech sector, which has obviously been selling off quite a bit from all-time highs, pretty much cut in half, 46, 47% drop. And since 2014, you'll notice a very consistent, pattern of this sector kind of validating that support. That's the higher low, that's the ascending support that it's been validating. In my view, this seemed very, very oversold, right? It was coming down pretty aggressively. A lot of the stocks have been de-risked. So I do think personally there's going to be a lot of opportunities in the biotech sector for 2022. Year to date, this sector is still down close to 15%, but I do believe that biotech will have or will give us a lot of opportunities this year. So, LABD, we've talked about this ETF can't keep going up forever. It almost got tagged at that 100 SMA, which it has done previously a couple times, and then that's exactly where we saw that resistance. So when you look at the biotech sector hitting that support and you've got the inverse ETF hitting that resistance, you've got a pretty good probability of a reversal here, which again, we'll see if that happens. We're already starting to see the first 3 red candles over the last 3 weeks, which is why I wanted to sell a cash secure put on LABU. I think the first one we're up close to 40%, then we sold another one yesterday. So, all right, let's take a look at the markets. We're still, just trying to recover here, not that much, but the Nasdaq still down over 1.4%. This is going to be the 10-year yields. Where are the yields here? Did we cross 2% for the 10 years? So 1.998. So we did breach 2.001. So we did get up to over 2% for the 10-year yields. So definitely, pushing up aggressively. So TLT should be selling off, right? So bond prices coming down. So when prices come down, yields go higher. So that, obviously has been selling off quite a bit from highs of 154. So that's a drop over 11.4%. A pretty aggressive drop here. So Micron is up over 5%. So very, very strong move for Micron here. They didn't report earnings today, did they? Yeah, they didn't report earnings. They are surprisingly up. But yeah, if you know why Micron might be up quite a bit today, just let us know, because this is definitely surprising. I mean, it was already trading at a very reasonable to low valuation, right? So it trades at 13 PE. Like, come on, give Micron a break here. And we're trading over 3.2 times sales and price to cash flow under 7, with enterprise value EBIT at over 6.4, right? 6.5. So a very, very low valuation for Micron. I think they have reported some very strong numbers. And this has also been very strong growth. 48, 49, 50% for Micron. They were on a consistent downtrend here, and I think this right here were the earnings that really turned them around to a nice 41, 45% growth. Let's take a look at Tesla. So Tesla, I've done a video on Tesla as well recently. So again, on a forward basis, the valuation is still a little bit high. This can be seen as some type of a bear flag as well for the company. So you'll notice that we're just consolidating sideways, and the prior trend was a little bit of a sell-off. So we'll see if we actually break below the $900 level, right? So if you break below 900, then the next support is going to be that 300 SMA sitting roughly at 785. 787, 785 is going to be that next support right here, kind of aligned with that 300 simple moving average. And that's also been a previous resistance for Tesla. So first support 900 all the way down to 785, 790 levels for Tesla. Look at that. We do have some buyers step in. We do have buyers in our presence. Kind of feels like it, right? So it's not just all selling pressure. We most certainly do have some buyers present. I want to take a look at the volume and how that is right now for QQQs. So we do have about 2.6 million shares traded the first 5 minutes, then 2.8 million. So far, we got about 500,000 shares traded for QQQs. So still a long ways to go from this gap that we left after the inflation numbers. Let's take a look at Facebook. So Meta, Facebook, wow, green now. Up over 30 basis points, so not bad. How are we doing on these stocks? So Facebook green, we got Tesla just down about 1%, Apple down 1%, AMD down 2%. How's Amazon? Amazon down 1.3%. And we got Twilio still up close to over 9%. Truly still needs to open. Where is Truly trading at? Upstart is down about 0.5%. Wow, Upstart's also getting bought up very, very nicely. So we were at $107, but then it got bought up here fairly quickly. So Tuesco says, I bought the absolute low on the QQQ in the morning. That's incredible. That's amazing. Congrats. That's awesome. Walgreens pretty much flat here. And then we got Take-Two Interactive up over 1%, Enphase close to 1% in the green. PayPal's also up. A lot of the beaten down stocks like PayPal and Facebook, it's kind of like a sympathy trade right now. They're like starting to push back to the upside here, even though a lot of the growth stocks are still down, right? Shopify, Neo's pulling back a little bit. We got Qualcomm surprisingly down. I think Qualcomm, can't remember, did they report earnings? Yeah, so they reported a few weeks ago, which was a big beat on both revenue and EPS, but right now it's just more or less flat. Sheetal, do you ever feel like missing out on opportunities due to you doing live streams? Absolutely. Absolutely. Every time I get the worst pricing, my man. I get the worst pricing because when I'm usually like either selling my cash secured puts or closing out my positions, like the market's moved so much where I get the worst premiums. I get the worst pricing when I'm looking at the markets after the live stream. So yeah, definitely that's an issue. Because I usually don't even trade on my computer. I usually trade on my phone. Like that's what I do. I don't even do or make trades on computer at all. I'll just look at the data, and usually most of the times, I would say like 95% of the times, I make trades on my phone. That's it. Makes it more accessible and it's just a habit. I don't even remember the last time I actually placed a trade on a computer. All right, let's take a look at MGM. Let's see how that stock is doing. So MGM pretty much up over 10 basis points, so not a whole lot. We got a nice bounce back higher from that 300 simple moving average, so up close to 24%. Let's take a look at the quarter numbers here. So they did report numbers. So very strong growth here. Reported 12 cents versus literally 0. And then we got a nice, 1,000% plus increase. Reported revenues over 3 billion. So it's seen a nice growth here. Resistance, it is coming up to a resistance here. I would say at close to $50. That's the level I'd watch. And support level right now stays put at close to $36. So 36, a very strong support. We've been kind of bouncing off of that level. This kind of feels like Amazon's twin for consolidation. Although it's only been consolidating for about a year, Amazon's been doing it for longer. Amazon's been consolidating since the beginning of time. Can't even remember. Since before the world was even here, Amazon's been consolidating. So Rajat, which app do you use for buying and selling? So I've got 4 brokerages. I've got Fidelity, I've got TD Ameritrade, I've got Webull, and I've got another one here in India that allows you to buy and sell US stocks. So it's just for different purposes. All right, so S&P is only down 70 basis points. It's actually not bad. And we've got the Nasdaq still only down 1%. So we do have some buyers stepping in. Volatility is definitely coming down a little bit. So it was, up over 22 levels. It was up higher, over 10%, 11%. And right now it's starting to pull back a little bit. So very, very interesting day where the markets are starting to recover a little bit. But again, it's only been 15 minutes or so. We do have most of the day ahead of us. So we'll see how the markets continue to kind of digest that inflation report and either go higher or lower. We'll see. But anyway, so that is gonna be all from me, you guys. It's been almost about an hour and 30 minutes since we've been doing this. So I did, we went over the CPI numbers, we covered the entire inflation numbers, lots of earnings. So InMode, Twitter, Cloudflare, AstraZeneca. We talked about a lot of companies like all the companies that are reporting. And of course, tomorrow, let me just give you guys a quick update. And then of course we talked about Twilio and Datadog and all those companies as well, and Disney, which reported very, very strong numbers. But then after the close today, we got Affirm, we got Cloudflare, and we got Zillow. I think Zillow I'm going to be very interested in to learn more about. Zillow is still beaten down. I think it's still very, very suppressed, down to $48, right? It's still hitting a new 52-week low. This stock at one point was at $205, fallen over 75%, right? So three quarters is basically fallen off. So very interested to learn more about those numbers. And then tomorrow we got Under Armour. Upwork also reports later today, and HubSpot. HubSpot is also a company that I'm watching very closely, HUBZ or S. And they've got a very, recently, so they have sold off quite a bit recently, with the valuation coming down about 52% here. So watching them as well on earnings. But anyway, thank you so much, you guys, for joining. I really, really appreciate it. And make sure that you drop a like. Today we had a lot more viewers than usual. So if you are not subscribed, make sure that you are subscribed so you are able to catch us on these live streams every day. And on top of that, we do cover a lot of macroeconomics and fundamental analysis and technical analysis. The core of this channel is mostly fundamental analysis, looking at the valuations, and then we look at the charts, the technicals, and of course kind of tie all that in with the macroeconomics as well. So thank you so much for being here. Really appreciate it. And make sure that you drop a like and subscribe if you are new here, and also check out the links down in the description below if you want to join and be a part of our money investing community. We've got a little bit over 3,000 members, talking about stocks, trading, cryptos, investing pretty much all day long, and you will get access to all the alerts and market updates as well. So thank you so much for being here. Really appreciate you guys. Have a great, hopefully a great green day.